Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion, it will be worth $20 trillion. Now, how much will ETFs get of that $20 trillion? I don't know. If all of public equities globally, no matter what wrapper they're in, are valued right now at roughly $120 trillion. So when I say 20 trillion by 2030, that's a very big category.
Record after record, Bitcoin is closing in on $1.5 trillion in valuation, about triple the current market cap of EV maker Tesla. ARK Invest's chief investment officer, Cathie Wood, envisions Bitcoin evolving into a formidable $20 trillion asset in the future. In a recent interview, she elaborated on how the dynamics of ETFs and the halving event drive up Bitcoin's price projections. Bitcoin's bounce back from a prolonged crypto winter has been ongoing. Over the past few years, Bitcoin saw its value fall from around $67,000 in late 2021 to around $16,000 in late 2022 and early 2023. Unlike anything in the crypto market, it's now mounted a fast and furious comeback. Bitcoin has been on a tear lately for a couple of crucial reasons. One is that the halving is approaching, which generally correlates with increasing Bitcoin values. Another is that U.S. regulators gave Bitcoin ETFs the go-ahead to hit the market earlier this year, a signal that the federal government and the market are more or less accepting cryptocurrency into the financial mainstream. On March 11, 2024, Bitcoin ETF inflows surged, marking a substantial net gain of $505.5 million, as reported by BitMEX Research. BlackRock's iShares Bitcoin ETF led the charge with inflows totaling $562.9 million, resulting in a 0.12% increase in its total assets. Fidelity's FBTC fund contributed significantly to this positive trend, attracting $215.5 million in new investments. However, Grayscale experienced continued outflows, with $494 million exiting the fund, marking the highest level since February 29. Despite Grayscale's outflows, the inflows into Newborn 9 ETFs significantly outweighed the outflows, maintaining a positive trend for the sixth consecutive day. It's worth noting that since January 26th, total outflows have surpassed inflows on only 2 occasions. Wood highlighted that the widespread availability of ETFs in the financial market could speed up Bitcoin's value growth by enabling more accessible arbitrage and encouraging wider acceptance and adoption of the cryptocurrency. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
All of the ETFs out there right now hold about 3.9%, roughly 4% as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Puel does for us, you'll see that long-term holders account for 15 million of the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million. And the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs which have taken the friction out of buying Bitcoin and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggest to us that, that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to wrest the supply, some of the supply, out of long-term holder hands. And just to clarify, long-term holders, and again, you can track this on chain, they have not moved their Bitcoin from their wallets in at least 155 days. And when that occurs, the odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically. But I think what we have going for us this time is the financial markets. When you've got the entire ETF infrastructure out there ready to arbitrage these sorts of events, we may pull forward the price increase and accelerate the transition you're talking about.
After ETF, next on the horizon is the fourth Bitcoin halving. Analysts expect the next halving event, where the reward will fall once more to 3.125 bitcoins per block, to happen in April. Previous halvings have been no exception to that rule, with Bitcoin climbing to new highs after each event. Last time out, its price surged from under $9,000 to about $60,000 in under a year. But the big question remains: will the upcoming halving Bitcoin trigger increase its cost, or are other factors at play? Cathie Wood noted that ETFs enhance market efficiency, potentially speeding up price reactions to halving events due to increased awareness. She highlighted Bitcoin's role as a risk-off asset during the March 2023 U.S. regional bank crisis, highlighting its contrast with traditional banks' counterparty risks. Now, let's redirect our attention to a video.
The halving, so we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, very long-term, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response, and the supply spikes with it. That cannot happen with Bitcoin. So it's quite a different dynamic. So the halving is that milestone. And if you look historically after halvings, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. Now that the market's becoming more efficient with ETFs, it might, because think about how many people even know about the halving this time around, when they didn't even know what Bitcoin was 4 years ago. They didn't know what it truly was. And if I can just throw one in terms of how we try and describe what this monetary revolution is. The first, global, that's critical. Private, no government oversight. Digital, decentralized, rules-based monetary system in history. It is what my mentor, and many people know Art Laffer for his Laffer curve and fiscal policy and so forth. He's a monetary scholar as well. And he said, I have been waiting for this for 50 years, ever since they closed the gold window here in the United States in 1971. Well, I think something very important happened last year. In March of 23, regional bank crisis here in the United States. Regional banks imploded, some went bankrupt, and Bitcoin exploded. It went from 19,000 to more than 40,000. What did that demonstrate? That demonstrated that Bitcoin does not have counterparty risk like banks do. And so it became a risk-off asset. Before, we had just thought of it as a risk-on asset. When liquidity is flowing, Bitcoin will be one of the prime beneficiaries. But this idea that it is also a risk asset, and as we hope we've shown in our own new asset class paper, white paper, its correlation with other assets is so low that institutions have a fiduciary responsibility from an asset allocation point of view to at least look at it. And if they want to dismiss it, fine. Vanguard did. But what we think that Vanguard is doing is, well, one of two things. Vanguard has never invested in commodities, so it's just treating this like a commodity. For the most part, it hasn't. But we think it's a new asset class, and Vanguard will be depriving its clients of access to a new asset class, which, if continues to be low correlation of returns, what will happen is those using it will see increased returns per unit of risk, and they will outcompete the Vanguard advisors. So I think there will become, even for the Vanguard ecosystem, a demand pull.
Bitcoin on Monday surged above $72,000, a new all-time high, but that's far from the peak expected by some who track the world's largest cryptocurrency. Lender Standard Chartered anticipates Bitcoin will reach $100,000 by the end of the year. Research firm Fundstrat has a target range of $116,000 to $137,000. Hedge fund Skybridge predicts $170,000 by April 2025. We welcome your insights in the comment section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.